end of the week. Over the last 10 trading days, we have witnessed, I believe it's now 8 Fed members coming out and essentially telling us how they're going to vote, telling us that they're going to leave the door open for rate hikes. And then we had the ISM, we had the PPI prints come out. We had our unemployment data come out this week, ADP. And essentially that takes the labor market fears of the market, the labor market slowing down completely off the table. And it has now finally woken Wall Street up to the fact that there's not going to be a rate cut. And this is what is absolutely amazing about our markets, is how far they can lose sight of reality. And we resolve that by trading the trend until it fails, right? I mean, we went up 1,300 points and the market kept on grinding higher on a false narrative. It doesn't matter if it's a false narrative in an analyst's eyes or an economist's eyes, or someone that's paying attention to the macro's eyes. From the perspective of trading setups, the markets have been leading us higher inside of this environment, successfully in a series of measured moves over the past 9 weeks, while all of the underpinnings of the market were deteriorating underneath of it. And I'm really proud of this little indicator, and I'm going to toot my horn here, or maybe I should toot Gave's horn, because it's his idea. It's just an adaptation of his four quadrant model with a little tweak, and it's making it faster, speeding things up a little bit. He looked at things, or the combination of the S&P and crude oil and treasuries and gold on a 7-year moving average. 7 years, right? That's crazy. Well, what we did with this is we went fast. We went daily, weekly, monthly, and I weighted them. So basically we're at 40%, 10%, and 50%. And so the short time frames are essentially they're kind of dragging around the longer term averages. And so what we wanted in that type of environment was we wanted something that would tell us when we reached moments of extremes. And you're not going to remember this, but if you go back inside of the market analysis videos, we were pinned over here inside of an inflationary bust. Pinned. And we had screamed over into this direction here, coming out of the end of March. And then we came off of that edge. And what was that? That was the low. You reach this extreme and you're pinned on that extreme, pinned, and you come off of it. The next day, the market ripped. The market ripped. Now, we have not seen another extreme. We haven't been to an extreme edge in any of these environments here until we got into the end of last week. And then we came off of our low on June 1st, and then we retraced June 2nd. And this is the day, June 2nd, it's the first retracement that we had in a 2-week period. And I wanted to show you what it looked like up here. This stream continues at eminiaddict.com. The link is in the description. Join me there for tools and resources for learning measured move trading. I wrote the book on the measured move. Check out the hundreds of others that have learned trading plan development, pattern recognition, money management, and trading discipline with me to become the best, most confident trader that you can be.